Hey North Shore Pump, do you want to know what's going on in our hyper-local housing market? We'll cover that today in your March 2025 housing market update. What is going on, party people? My name is Chris Elliott. I'm a local realtor as well as a Windham resident with 11 years and 550 home sales worth of experience. In this video today, we're going to be talking about home prices, we're going to be talking about mortgage rates, and then we're also going to be talking about what you're probably seeing in the national news networks and how it doesn't necessarily line up with what we're seeing in our hyper-local North Shore Pump market. Let's jump into it. All right, so first and foremost, we're going to be talking about home prices. So I've had a handful of clients that have reached out to me over the last week or two saying that, hey Chris, I heard on the XYZ network that the housing market is softening, and this is true, but it's also untrue, and I want to break that down for you. So if you look at the graphic, you'll see that home price appreciation, or the rate of home price appreciation, has slowed and has returned to more of the normal historical 50-year average of somewhere between 3 to 4% per year. Compare this to the boom years of COVID, where we saw upwards of 20% appreciation on a yearly basis, which in the context of history was absolutely insane, very much like a unicorn or just kind of a once in a 100-year phenomenon. Now, keep in mind also with this graphic, we're talking about home price appreciation, or the rate of appreciation. We're not necessarily talking about home prices. So the rate of appreciation has slowed, but home prices have continued to appreciate as time has gone on. So the numbers I just shared with you were on a national scale, but keep in mind that real estate is very much a local business. If you look at this graphic, you'll see that rates of appreciation vary from region to region. So our very own Mid-Atlantic region was second in the pack for home price appreciation this past December. And more importantly, if we look at our very own North Shore Pump, you'll see we saw 22.9% year-over-year appreciation from February of last year to February of this year. So we're still seeing astronomical rates of appreciation in our local area. We are way outpacing the 50-year national average, and also way outpacing Central Virginia, which as a whole saw 5.5% year-over-year appreciation. So specifically our local area is continuing to appreciate at a crazy rapid rate. So how can this be, you might ask yourself, and thank you for asking that question. Well, our median days on market in February in our local market was 13 days. We currently have 1.3 months supply of inventory, which means we're in a screeching hot sellers market. On median, home sellers in our local area got 99.3% of their asking price in the month of February. So our local market would have a long way to swing before we saw price depreciation. Honestly, we'd have a long way to go just returning to normal rates of appreciation from what we've seen in a historical context. So in short, in layman's terms, if you are worrying about your home value going down, fear not, all is still good in the hood. All right, so let's talk about mortgage rates. So mortgage rates are national. So this is applicable to our friends outside of North Shore Pump, as well as outside of Central Virginia. What's going on, Mom? Let's jump into it. So the good news is rates have started to come down. At the time of this recording on March 17th, the 30-year par interest rate is sitting right at about 6.79%, which is slightly down from the 7-ish% rates that we saw at the beginning of the year, and we were kind of stuck out for a good bit. This is encouraging, given that rates have dropped faster than the fine folks at Fannie Mae, Mortgage Bankers Association, Wells Fargo had originally projected at the beginning of the year. We'll just have to see if these rates hold or if we continue to see rates come down. So why are rates coming down, you might ask yourself, and thank you for asking that question. I'd love to tell you. So in part, inflation has ticked down slightly in February, and the closer that we get to the Federal Reserve's target inflation rate of 2%, the more likely we are to see lower the federal funding rate, which in turn influences the 30-year mortgage rates. The Federal Reserve doesn't directly control mortgage rates. However, they influence them through the federal funding rate. All right, so what does this all mean to you? So as we do always, 3 tips to my sellers as well as to my buyers that we'll share with you. For my would-be or current selling folk, the first piece of advice I would give you is, I hate to break it to you, but the market has not been your problem. So if you've been on the market and you've not seen success, or your home's been on the market for more than 30 days, I hate to break it to you, it's either something wrong with the marketing of your house, it's something wrong with the price, or something wrong with the condition of the property, because the market has absolutely been on fire, in fuego, Espanol friends would say. So once again, I hate to break it to you, but if your home isn't selling, you got to take a hard look at what's going wrong, because the market has not been your problem. Secondly, as I've kind of already shared with you, our hyper local market is thriving. We've seen 22.9% year-over-year appreciation. That's absolutely insane. We're still cooking in North Shore Pump, which is really good news for homeowners, would-be sellers. Not as fun for would-be buyers, but who cares about them, right? Last but not least, if you are somebody that's considering a home sale and you want to time the market, I would encourage you to beat the summer slump. So what we know historically, especially in our area, once the kids got out of school, which is at the end of May of this year, not that our market comes to a screeching halt, it doesn't fall off the kitchen table, but we do tend to see our real estate market slow down tick. So if you would like to time it, get your home on the market before the end of May. For my buyers, realize that homeownership is a long-term play. So I've talked to a lot of would-be buyers that are concerned about the economy, that are concerned, home prices fluctuate up or down next year. Certainly you want to make sure you have security in your job, but assuming that's not a worry for you, realize that we've got to look at home ownership on either a 5 or honestly, I look at it on a 10-year time horizon. If you look historically, most real estate is appreciated over a 10-year time horizon. If you're buying and then reselling and then, within 5 years, yes, you're going to be subject to market fluctuations, but hopefully you're looking on it on a longer horizon. And if you do so, you're probably going to do okay. Realize that dropping rates are going to more than likely equal climbing prices. So what we know is when rates drop, money gets cheaper and therefore home prices tend to increase, especially in the environment we're in where we already have limited inventory, because you're going to have more buyers competing for that same inventory. More buyers are more than likely to be coming in the market as rates continue to drop. So if you're somebody that's holding their breath, waiting for rates to continue to go down, they are scheduled to go down, but realize that whilst you're waiting, home prices are going to continue climbing, right? So alternatively, what I would recommend, if you could find a home that works for you and your family, assuming you can comfortably afford it, buy the home now, lock in the price where it is right now, ride the wave of appreciation and refinance at some point in the future when rates inevitably drop. And then last but not least, you've probably already connected these dots, but it is still a competitive environment out there. We're still seeing where homes are selling from anywhere between 5 and 10% over the asking price. So realize if you're out there shopping for a home, you are still having to be competitive. That's not something you are willing to do. I would encourage you just to sit at home, turn on a show, watch Netflix, but you're going to frustrate yourself if you're out there trying to write offers on properties, especially in our area, under asking price or with not favorable terms to the seller. Hate to break it to you. Well, guys, that was your March 2025 housing market update. Thank you for tuning in. Hopefully this was valuable. If you have any questions that we didn't cover, shoot me a DM, throw it in the comments. Thanks for tuning in. Look forward to seeing you next month.